Let's take it over to Alan Knuckman, the Chief Market Strategist at Paradigm. Alan, what's your trader talk?
Hello, Angie. It was a hot January. We saw a January boom and a stock market snap back.
Alan, tell us about your latest trade winners and what you are watching.
Our current positions are looking great. Our portfolio is in good shape here. We sell into strength. That's still our strategy. We continue to hit our heads on this S&P high from December, but we've used this to take 50% profits in Citigroup and Micron and Halliburton. So we've got the other half left if they're going to continue to move higher.
What's your new trade for us this week, Alan?
All right, today's trade trigger is Lyft, as in lift up. So we've seen bullish divergence there, meaning it made new lows but not new highs in implied volatility. Also, you're seeing leverage buying. Now, this is a stock that's trading around 16 right now. It had been between 10 and 15 for 4 weeks, so it's breaking out. In the bigger picture, it's between 10 and 20. So that 15 level is an important midpoint pivot that we popped above. So the way to play here is I'm looking at an option for July, a July 12.5 call, which is in the money. That option is trading for about 5 right now. The stock's at 16, so it's about $3.50 or so in the money with plenty of time for bullish development.
What's your call option strategy on Lyft?
Well, when it comes to Lyft is down 65% off its high from last year, whereas Uber's only down about 30%. So it's got some catch up to do. Again, a limited risk option with nearly 6 months of time, and it's only about $75 more expensive than the April option.
Let's get your trading day takeaways.
All right, let's talk trading takeaways. Trading takeaway number 1, slow down, speed up. So the rate hike pace slowed this time to, instead of 0.5 point, to 0.25 percentage point. So that's somewhat a positive here that we have our destination in sight and the S&P is still above 4,000. Number 2, terminal rate end beginning. So it's not terminal for the markets. All these rate hikes that we've seen, we've gone up, 5% here in the last 8 months, but that's not harmed the market. And that 5% top that we talked about, or right close to it, looks like that's going to be the destination in place. And number 3, price, not policy. Like I said, it's not as important what happens with the Fed, it's how the market reacts. We've got rates down, we've got inflation down, we've got unemployment down, we've got the dollar down, we've got the VIX down, and stocks are 15% off of their low in the S&P.
Have a great rest of your trading week, Alan. Thank you.
Thank you.
Go to businessfirstam.com for where to see our show on TV.